Guys, what's going on? I saw your comment, bro. My chart making you want to close your long. No. Don't think like that. All right? Don't think like that. What's good, gang? Hey, you like the beats, man. Go reach out to my guy, Ed Poster, on Instagram. That's the guy who makes these beats. Some of the beats are taken from another source, but majority of the beats on this channel were created by Ed Poster, man. So just put that out there for you. So how is everybody? PC Shed, John, Sack Trades, Tube Grazer, Thad, how you doing? Premier Crypto, Greg. Who else we got in here? We got Matom Bomb, how you doing, bro? Daniel, B Stew, what's good, man? How you doing? Fat Ninja, what's happening? Crypto Capricorn, what's good? Righteous Reject, how you doing? Who else we got in here, man? Who else we got? Real Noriega. You still owe my guy 100 favors, bro. There we go. Yeah, the biggest bull trap of all time. You know, the biggest bear trap, bull trap. It's irrelevant, okay? Everyone's speculation about what price is going to do next is what keeps us putting our money in this game, because we believe something's going to happen, all right? So it doesn't matter. We need to go by what we see. What's going on, guys? Who else is in here? Okay, you're having a problem with the Discord, I'm guessing. Check out one of the moderators in the Discord. It should be okay. Bert, how you doing? Sophia, sorry, how you doing? Hope you're all right. Nice. I'm not the guy from Crypto Banter, but I can be if you want, bro. How you doing? How you doing? You're driving, not looking at charts, listening to... We know you're looking at the charts, bro. We know you're looking. Dynamis, how you doing, man? This is great. It's a lot of love in the room tonight. It's the final day, guys. All right? It's the last couple of hours before a new monthly candle is formed. All right? It's a very important time in the chart. All right? So, Fight Club, Free the Monkeys, happy days. I love these little comments that come out onto the chat, man. Okay, love from Malaysia. All right, cool. What's going on? Tube Grazer, thank you very much. All right, ladies and gentlemen, if you are new to the channel and it's your first time passing through, be sure to like and subscribe. You know, we got to do that YouTube thing. But other than that, for my pattern watchers and to everybody new, my name is Tino. Welcome to the Traders Reality channel. Let's have a conversation. Let's get it. So, what do we know? Because that's what we're thinking every time we come to the chart. What do we know about price? What do we know about intention? And what do we know about where price is likely to go next? Okay? So let me just do something. Let me get rid of all of this on the chart so we have a clean slate. Actually, I'll leave that right there for you. Okay? But the topic of conversation this evening is Bitcoin, or should we say, are the market makers on their quest for the hunt for liquidity? Now, when we say hunt for liquidity, it's all good for them making money to the upside, but they can also make money to the downside, and they can also start marking up their positions in anticipation for another move back up. What they're doing now is they are taking advantage of the traders who are not paying themselves, to the traders who are holding on to dear life, that they believe that 50K is probably going to get hit, or the 60 or the 100K is going to get hit. Now, holders, it's a different thing, okay? For holders, it's a completely different set that you have to be approaching this game with. Holders right now have to be paying attention to the fact that there is a new monthly candle about to print, or in the next 2 hours as such, okay? Once that new monthly candle comes into play, a plethora of intention, new orders, new targets are going to get rolled out, all right? They've worked this month, they've worked the ranges, they've done everything they could to get to where we are right now. They have moved price down lower. Let me get rid of all of this stuff here. They've moved price down lower because are they, in essence, preparing to move back up? But how far will they move price down before they decide to move back up? This is what we are here for, ladies and gentlemen. So let me put things into perspective for you, okay? Let's have a look at Bitcoin on the higher time frame. Excuse me, that has just taken me by storm. So the monthly time frame. This is not a time frame that many people like to look at, but here we go. If you remember, not so long ago, guys, we were talking about Bitcoin potentially recovering these vector candles right here, and it was being discussed in and around this zone, okay, where we were trying to establish whether the 28, 29 mark was the absolute low that Bitcoin would take. Now, as you can see, we have a new monthly candle on its way, okay? Now, of course, GMT, I'm in the UK. It's not the first yet, but of course, Sydney now, it's 7 a.m. They've had the new day, okay? It's the 1st of September over there. So those guys are already in the trading game, okay? So a new monthly candle has been formed. Why is the monthly candle important? Because it's the start, okay? It's the start again for a new set of targets, a new criteria, a new intention. Where do they plan on sending price? Okay, that's what's really important about the new monthly candle. And here's something for you as well. Look at this. Drop down to smaller time frames, and this is what you're going to see on these sort of platforms itself, okay? So let me just change something up here for you. Scale to fix. Job done. And why is it not working? Let me come out. They should actually do it, and I don't understand why it's not working. Hold on. No, that's not working right there. Give me a sec, guys. Let me take that down. Okay, cool. Now, check this out. On this platform particularly, all right, if you look on the smaller time frames, you're going to see a gap down. See that gap right there? That was a gap down. In that moment, an exhaustion of orders had come into the market. So it's like the only way that we can translate that gap down is there was a bag of orders that pushed price down lower. Now, as you can see, the actual volume at the lows right here, it doesn't show true volume, okay? It shows you the amount of times price changed hands, okay? So it's a different kind of volume, all right? But it gapped down, and then the gap has been fully recovered. This is the start of a new month. We are on now a new daily candle, and the new daily candle has started positively, all right? We look on the time frame itself, and we can see that we have got many zones that they could actually bring price back up to at the start of this new month. Rolling over back to the monthly time frame itself, okay? What can we project from this? Well, we've got this wick in this area right here. Now, usually wicks tend to get recovered, all right? Is this the start of a month which will send price higher? But like always, whenever some new candle forms, we always tend to see it move down a bit before it moves back up. Is this what we're going to see? So what area is the moving down? So let's bring it back to TradingView. All right. Let's look at the zones. Now, Bitcoin has done very well to hold this zone, which is the 47,000 mark again. 47,000 seems to be a key point in the chart, especially for this range right here. Okay. What they do now is very important, or what they're going to do from this point on until the next session is going to determine pretty much where they plan on sending price over the next week or so. going into the new month. Okay? So, in light of the hunt for liquidity, where are the next pools of liquidity? Well, we've got this bag of money down here, which sits at the 800 EMA on the 1 hour time frame, which does sit on the 4 hour 200 EMA. All right. Now, it's important that Bitcoin does come down to the 200 EMA. Why? Because that means they are bringing it back into the fray. They are going to encourage others to step in and do something at this point. Look at the previous orders that had been built. There are traders that are actually sat in longs right now that refuse to close the trade because they just want to see if it's going to continue back up and try and grab that 60, 70K per Bitcoin because they've been so fixated on social media and all other platforms that talk about where everybody thinks Bitcoin is going to go next. All right. You want to understand about how people are thinking about cryptocurrency? You go to a place where they talk about cryptocurrency across the board. So look, you've got Cryptocraft, which is a news place which you guys are familiar with, a news place which has all articles being discussed about cryptocurrency. And it just tells you exactly what is being told across the board. And you can see bright as day, different articles, different resources, Cointelegraph, FX Street, Decrypt, the blockcrypto.com, everything is being put in here. Okay, so from a retailer's point of view, with the way we use this strategy, what are the retail traders thinking? You need to ask yourself and say, so in order for me to understand how the retail trader thinks, what is being provided here to make the retail trader hold his position, keeping his liquidity committed to the chart, allowing the market maker to tap into his liquidation points and to the stops for the traders who took the long to the upside and didn't take any profits when price was making highs. Okay? How far will they move price down? And how long will the retail trader decide before he's going to close his loss? Okay? Now just look at what's being discussed. Naomi Osaka has now found an interest in cryptocurrencies. Tennis player, superstar. She's interested in crypto. Happy days. Well, unless she starts buying silly amounts of cryptocurrency to instigate a move in the market, then what her interest is irrelevant. Okay? They use Dogecoin as the reason why it sparked her interest. See how the retail trader's going to see that? He's going to think, okay, if she's buying, I'm definitely going to be buying. All the tennis enthusiasts, they're going to start coming to the table and start buying cryptocurrency. These are just adverts for liquidity, guys. All right? They are adverts. How can we get people to commit to cryptocurrency? We'll just talk about articles and actually get people to do something. All right, tennis superstar. Is she going to buy some? Well, until the day she decides to buy some and we can see it bright as day that she's purchased it, that information right there is speculation. Okay? Now, something about Tether asks court to block MYAG form from releasing documents to CoinDesk. That is something that, you know, those who look into it are going to be really paying attention to it and understand the effects of that. Okay? But just using this platform right here is really going to help you, okay, understand how the retail trader is going to translate the information off here, because a retail trader who's new to trading needs to look like he's being productive with his strategy. So he's going to come to a news place like this, look at all the positive and the negative news about cryptocurrency. Then he's going to come back to the chart and make a decision based on what he understands about the general sentiment of cryptocurrency. What a fantastic way to lose money. Because that's how it works. Why is this here? Okay. Look at it. It's positive news. Like, look, El Salvador approves 150 million trust fund to support Bitcoin ambitions. Great news. That means $150 million is going to be coming into the market, or there's liquidity available for that. Okay. Happy days. Retail trader. I'm going to buy Bitcoin now. 3 reasons why Bitcoin ETF approval would be a game changer for Bitcoin price. Look at the key words they're using. ETF, approval, game changer, Bitcoin price. 3 reasons. 90% of retail traders won't even care why. They'll just go straight to the chart because they don't want to feel like they're missing out on potentially the move before this issue or this new thing about an ETF approval, then the impact it will have on price. Come back to the chart and you'll understand what I'm talking about with the quest for liquidity hunt by the market maker. The way he moves price is the way he's going to encourage retail traders to step in. Or, alternatively, encourage the retail trader to keep a hold of his position, because there are a lot of guys that are long that have actually seen a little bit of success with this move to the upside. There are probably traders who have actually got long right here and they are sitting on a very handsome return, but they're not doing anything about it. Which is why Bitcoin effectively should come down towards the 200 EMA and recover this previous pool of liquidity, which sits in and around the 45 zone, the 45 mark right here, before we can actually deem a valid reason for price to continue higher from that point. Now, this is on the 4-hour time frame, guys. Okay? That's what's important. It's on the 4-hour time frame. Now, looking at things across the board, ladies and gentlemen, it's quite evident that the star of the show had to be Ethereum today, in my opinion. All right. Now, of course, you have got the likes of who's actually done pretty well today. Sol. Where is Sol? Sol. Where is Sol gone? Why ain't Sol up there, man? Am I missing something? Where on earth is Sol? Yo, where is Sol gone? Wait a second. What's going on here? Why ain't Sol doing so good, man? Oh, that's why. Okay, that explains that. But you can see earlier on, she made a big move to the upside. Okay? Sol did make a move, and that was happening today at 2 p.m. All right? Now, it's important that you actually watch that stream from earlier on today, ladies and gentlemen, because that is really important and in line with what we talk about tonight. Okay? Just going back to Bitcoin for a second. You can see 1 hour time frame. Today, we had a perfect stop hunt rise by the New York session. Okay? Everyone was getting a bit excited in and around this zone. But as always, what do we wait for? We wait for the 5 and the 13 EMA to cross over the 50 EMA for us to verify that price is going to move higher. It didn't happen. But they trapped the retail trader right here. Look down on the lower time frames and you'll see it bright as day when they initiated the stop hunt rise outside of the US Brink session, and then they continued price lower. What a treacherous thing. Look, the signs were there. They were building their shorts above key notable areas. And what were those areas? The 48,000 zone. Why are we seeing vector candles above the 48,000? Because they like to build their shorts at the highest possible point above that zone so they can get the best possible fill when they break down through it. And you can see the red vector candle right there, which solidifies that break to the downside. All right? Ladies and gentlemen, have I got your attention? Who we got in this room, man? Who we got in here? The Gartley patterns. Yeah, the Gartley patterns are good, man. You know, and a lot of the Gartley patterns are great on higher time frames. But the thing that you need to understand with this strategy, guys, it's all about short-term day trading movements, okay? Before a Gartley pattern can, really fully play out, you've got to wait for a lot of things to come into play, all right? And I personally, my strategy or the way I trade, I'm not going to be waiting that long. Okay, I'm going to be in and out. I'm always about trying to grab the volatility away from moving averages. And then when price comes back into the moving average and I'm understanding this behavior here, I'll find more benefit understanding why in the US Brink session, price initiated a stop hunt rise, which at this point right here, I'd be preparing to go short as opposed to going long. All right, this is where the information is. Waiting for a bigger pattern to play out or a Gartley pattern, with no disrespect to it, but it's just not for me. I'm looking at more into the psychology of why price has been working this 48 zone, which is something that the Gartley pattern isn't going to tell me. It's not going to tell me that in the US Brink session, it's notorious for inducing stop hunt rises and stop hunt lows. We understand that the market maker manipulates price in such a fashion which he makes believe traders to go one direction when initially he's preparing for the opposite. That for me is the information that I'm looking for. All right, because that's going to tell me when price is going to drop lower. And it's going to show me when price decides to pull away from the moving average, which then makes me decide at what point am I going to get out of my short from this zone up here in anticipation for price to come back towards the 50 EMA and ride that movement back up as well. The Gartley pattern doesn't tell me that, which is no disrespect for the Gartley pattern. No, for me, it's not my kind of thing. but I am fully aware of it. Even the harmonics. You know, the harmonics have their place. The harmonics are no different to this. W formation, rise up, retrace, rise up, retrace, rise up, peak formation, drop, rise, drop, peak formation. That, by principle, is what the harmonic says. The same move to the upside here is going to be the equivalent to this. But we understand that this is a market pattern. It's a cyclical weekly pattern. No matter how you decide to brush it up and whatever indicators are out there, this is the business model of trading. And the sooner you understand how this development works, the easier it's going to be for you when it comes to trading. So then if we look at how price is behaving right now, you can see it for yourself, bright as day. You've got the M formation, drop level 1, drop level 2. We are anticipating a drop level 3 peak formation, and we'll see if it continues back up again. How far they will bring price down is going to all be reliant on the market makers deciding on where they want to try and tap pools of liquidity, which you can see in the chart. Does that make sense? Uncle, can you tell me what BTC is? Sean, what can shift and change pattern beside the news? Nothing other than the market makers wanting to go and send price to a point in the chart. So here's an example. All right, just look at this candle right here. Was this candle here induced by news? Was it induced by news? How can we understand if it was induced by news? Will we know if it was induced by news? Because we know what a news candle kind of looks like. All right. If you remember back in the day when Elon declared that he was buying, well, Tesla was buying Bitcoin, the effect of that price through, it flew up to the moon. Bitcoin made some big gains on that movement. Actually, I will pull it up right now and show you. If knowledge serves me correctly, the date that Elon declared about Tesla was when it was just after I started the stream. Okay, it was in and around this zone right here, from my understanding. Or it was this zone right here. I think it was, yeah, after I came in after that. And then it came up. And this was, yeah, here it is. This, I believe, was it in April? No, it wasn't. It was before. It was February, wasn't it? When did Tesla say it? When did Tesla say it? When did Tesla declare that? Let me have a look at your comments here. Hold on. Tina, do you not think Bitcoin looks like a W on the 4 hour? Wouldn't market maker want to mark up price for the start of the new month and trap the longs? See, this is what's really interesting, right? Everyone's saying that there's a bear, there's a bull trap. In my honest opinion, it's BS. Okay? Because if everyone is thinking bull trap, everyone is starting to sell, market maker is buying, and then he's only going to reverse it all back up. That's what I understand. Okay? And the sooner you come to understand how they manipulate and they use, they use the psychology of impression, like influence. People read the news all the time. And if people are talking about, oh, it's the bull trap, and then that ends up getting solidified, as you can see, price then starts to drop. Well, I'm expecting it to drop, okay? Excuse me. But I'm expecting it to drop to a specific point in the chart, because the truth be known, Bitcoin has yet even broken last week's previous low. So before we even consider bull traps, okay, price is actually dropping lower. All right. Why would any retail trader be prepared to buy at this point? If anything, he's starting to go short. So if we look at it realistically, this is a bear trap, in my opinion. Market makers are trapping retail traders to go to the shorts, to the downside, getting them to believe that there is a bull trap. So all the guys who are long, again, are get ready to get thrown out of their trades. Everyone starts going short, and then they solidify that short by bringing price down to a previous pool of liquidity. And then that is the point where they will get maximum commitment from the retail trader to solidify his short and keep his money on the trade. And that is when the market maker will reverse price and tap all the liquidations and all the stops for all the retail traders who went short. That's how they move liquidity around the marketplace, guys. They want you to think something, and I say this all the time. What does the market maker want the retail trader to think? If that is what he wants to do, if he wants to make them think that price is going to go a certain direction, market maker will provide the liquidity for that. Okay? So he will let price drop down. All right? Gabriel, do I think Ethereum is outperforming Bitcoin? Well, this is the conversation that we had earlier on today, guys, talking about the fractional disparity. Now, fractional disparity is something to do with Forex in light of when you see dollar yen rising and then gold drops and vice versa. Okay? Now, with cryptocurrency, it's a little bit different because behind the mechanism of Ethereum is the Ethereum blockchain, is this big new marketplace that's come up, which is the NFTs. Look at what happened. Fake Banksy NFT sells for $338,000 in Ethereum. That transaction alone triggered something in the blockchain. Okay? So we've got a utility that influences Ethereum's movement on price. Bitcoin, on the other hand, is just whether someone buys it or not, or accepts that they're going to start adopting it. Can you imagine when Amazon decides to accept Bitcoin as payment? What do you think that's going to do in the chart? Do you think they want Bitcoin at 50,000 when Amazon releases that information? Hypothetically now, do you think Amazon, the chart or the market maker would want price to be at that point? Do you think institutional funds will be prepared to commit money when Bitcoin is at 50K if they think that they know that Amazon's going to accept payments in Bitcoin? Now, this is me just speculating, guys, because this is the game of speculation. We don't know what's going to happen next. All we have is what we see in front of us. Right now, Bitcoin hasn't broken below the 47,000 zone, okay? Until it decides to break that point and go beyond the 47 and go down to the 46,200 point, whether it's a Fibonacci extension or whatever. Ultimately, we need to understand that the movement of price is going to reflect what it's going to do later. That's all we have, okay? Black Suns, here we go. If Messi and Ronaldo are the green and red vector candles, who are the purple and blue ones? Who are the purple and the blue ones? I would say, oh God, nah, I'm not even going to say that because my guy is pretty decent. All right, what we can say is, really weak candlesticks, okay? Just call them Arsenal. I'm sorry. I'm sorry. I'm sorry. For anybody who just dropped that, who ain't happy with the idea of that. Mbappe, nah, man, Mbappe's sick. Anyway. You just lost the sun. I knew I would. Nah, mad love to Arsenal guys, but Arsenal, it is a pretty depressing thing. Okay, but people are going crazy at it's like, I mean, come on, let's get with times right now. Only a few games into the Premiership and everyone's losing their mind. Why? You don't know what Arsenal have in store. Eric, how you doing? Pennsylvania, USA, what's good, man? I'm 59, wise enough to believe it. 30K per month, full-time crypto now. We'll let you know when I'm a million. Well done, my man. Well done. Well done, my friend. Well done, Eric. Thank you very much for that. Yes, I'll agree. Arsenal right now are in a accumulation zone. They are stuck in a pattern and they just can't come out of this zone until the vector candle shows its hand. That's what Arsenal are doing right now. So right now they're at the lows, okay? And we're just waiting for them to just work the zone to come out of that zone. Now they may get a failure at the 50 EMA, but that's another story, all right? Back to the topic. Back to the topic at hand, all right? Elliott Wave, this is what I wanted to talk about. Okay, so my opinion on the Elliott Wave concept, all right? Yes, it's valid. It's all about cycles and understanding from point A to B to C, D. For me, the thing about Elliott Wave, and I had this conversation with someone and they were talking about the idea that, it doesn't factor in time, okay? And I've used the Elliott Wave theory. Now, principally, this pattern that we see, you know, with the market maker itself, this, you know, rise, retrace, double up and all of this madness to the downside and what have you. Okay. Yes, it operates on the principle of the Elliott Wave. It works on the Wyckoff theory. Now, you remember these guys, their concepts came out nearly 100 years ago. Okay, so back then it worked effectively. And to this day, okay, it would hold. And those actual strategies do work out. But it's all down to how and where you apply it. All right. You've got cryptocurrency, which is a very, very volatile marketplace. Okay. Now, back in the day when these concepts were introduced, okay, volatility wasn't that much, okay, because they didn't have that much liquidity coming into the marketplace as compared to now, you know? So it's really down to how much you become involved in the strategy itself, all right? I'm not here saying that this strategy is the best strategy out there, but what I'm saying is this strategy follows the business model of the market maker. And I'm not going to deviate away from that. Potato TV, thank you very much. I'm getting chips, not tips. Get it? Yeah? Is that it? Could you explain a vector candle versus a normal candle? Okay. This strategy, ladies and gentlemen, okay, a little bit about me. This strategy is taken from Forex, okay? It's designed by nature for Forex, not crypto. I started this stream back in January 2021. No, sorry, the 21st of January this year, because I was waiting for my cup of tea to brew. I love a good cup of tea, and I was waiting for it to brew, and I literally opened up my laptop. I was browsing the charts, and I thought, okay, let's see if I can go live with my laptop. Is it any good? And I went live on YouTube because I had a YouTube channel. All right. And I was just talking about psychology of trading, or in essence, it's my experience of trading. And I just wanted to create like a little mini podcast and just talk about it, okay, and see who it would appeal to, all right? And when I opened the chart and I started talking about it, I had 15 people on the live. I was happy as Larry. And then all of a sudden, I ended up with about 400 or 500 people in there. And I did the same again the next night. And before you know it, we are where we are today. Now, I'm trying to see if Forex, at that point, I was trying to determine if Forex was going to be, the strategy of Forex was going to be applied in cryptocurrency. Were there market makers? Of course there were market makers, but would they behave the same way as they would in cryptocurrency? Okay? And this is what I was trying to establish. And we are where we are today, ladies and gentlemen, and we've got people that are absolutely ripping it, and they haven't even touched, okay? They haven't even considered cryptocurrency. I mean, sorry, Forex. It's crazy. Is the PVSRA more effective on the smaller time frames? It's effective throughout. It's just if you go long on a 1 minute time frame, if you go long on a position on the 1 minute time frame, just know that there's going to be a good chance that that move is going to retrace and end. Now, you're going to see a retracement much sooner on the 1 minute than you would on the 4 hourly. It's going to take a while for a retrace to form. Okay? Just look how long price spent away from the moving average on the 4 hour time frame, and then look how long it took for it to come back down again. All right. So you've got to take each time frame that you decide to use this strategy on into consideration. All right. And a lot of people do get caught up with the idea of if they trade on the 1 minute time frame, they're going to use the 1 hour as their basis for understanding where they are in the cycle, or they'll use the daily time frame to determine where they are in the chart and come down to the 1 minute time frame, make a trade. And if the trade's not going in their favor, they're going to go back to the daily and look at the bigger picture and say, yeah, it's probably going to continue back up. I'm going to hold my long, and their long is actually getting bleeding. It's bleeding out, like losing them money, all because they decided to change intention and go onto the higher time frame to satisfy their desire to be in a trade, and they don't want to take a loss. Don't do that, guys. All right, you want to see a time frame and you want to trade off a certain time frame, make the commitment and stick to that time frame. That's all there is to it. Sorry, a vector candle, I didn't answer your question, my friend. I'm so sorry, Lewis. So the difference between a vector candle and a normal candle is this. All right, on this platform, the actual PVSRA software was designed on the tick volume. Now, tick volume is the amount of times price changes. So here is an example. If I pull this chart up right here, this is the tick chart for Bitcoin. All right. You can see the ask and the bid, and you can see how wide they are because of the time we are in the market. All right. It's effectively after hours. It's in the Asian session. So naturally the spreads are much wider. Okay. But you can see every time price changes between these zones, it registers it as a tick and it's a movement in price or an exchange of movement, an exchange of contracts. Okay. Now it tells you how many times price changes. So the difference between a vector candle and a normal candle is this. When you see a green vector candle, it means that price or the exchange of contracts at this point in time was at its highest level in this candle. The same goes for a vector on the red candle. The red vector candle tells you that the exchange of contracts in this area happened at the highest level and it closed to the downside. This was at the highest level and it closed to the upside. All right. Likewise, with a blue and a violet candle, all right, volume or contracts exchanged and the volume started to rise at that point. So contracts exchanged at a rising level. Okay. Same for the blue vector, but it wasn't at its highest. All right. So it's like they started to increase the exchange of contracts, but they didn't finalize with a big red vector candle or a green vector candle for the blue. Okay. Now, the information that we get, okay, from these vector candles is critical. Because we understand that if contracts are exchanging hands at this point at the highest possible point in the candle, or should I say at the highest possible level, okay, because you can see the tick turned on 2,409 times in 15 minutes. They exchanged contracts 2,409 times. The next candle, well, the candle before that was 1,748. So what information can I get from that? So we understand that the red vector candle means the market maker is building longs at lower prices. Now, the fact that the tick volume itself, okay, the red vector candle right here, sorry, that came in, sorry, it was actually more. I used the wrong vector, used the wrong candlestick right here, okay? Here it is, yeah. So 1,740, okay? Now, with this candle, I can say that if the market maker, okay, was favoring higher prices by building longs at the lowest possible point, so I'm able to understand that, is he going to go back up by the principle of the red vector candle getting recovered on the new start of a candle, okay? How could I translate that as a position to go long? Well, we look at it like this. Market maker goes long when price is dropping. The fact that he didn't allow price to go lower means he trapped enough liquidity to the downside to induce the trader to go short. And then he pulls price back up and starts his markup phase and brings price back up. So that move on this vector candle right here tells me that they don't want price to go lower because they're setting up for a move. Then when the start of a new candle comes in, okay, they start the move back up and the vector increases, and that starts on 2,409 contracts, okay? Although the candle moved higher, it was actually less than what the contract accumulation was on this candle right here, okay? So it's the way we look at the vector candles themselves is about what the market maker is doing, as opposed to understanding the direction of where price is likely to go. Because if we see the market maker is building longs in this instance, and then he's closing them at a higher point up here, okay, so volume has to be above a threshold for a vector. Not necessarily, well, yes, before a vector candle becomes a vector candle, it has to go above a certain amount of contract exchanges, okay? All right. Now, if we see vector candles appearing out of nowhere, we understand them to be stop hunt rises. Now, this is what happened here. It was initially a stop hunt rise. Now, a grey candle just means that it's just the market maker just working a normal zone and exchanging contracts at a normal pace with intention to just move price in the desired direction. The vector candles in the charts, ladies and gentlemen, are designed to introduce retail traders to come to the chart. Why? Look at this. So if I bring up Bitcoin on a normal chart where 90% of retail traders are going to be looking at it as, okay, you're going to see a different thing. So if I zoom in, all right, and bring up candlesticks, okay, let me just change the properties. Bull candle is green. Bear candle is red. Okay. Now, I need to make that clearer for you so you can see it. Bar up, white. Bar down, white. That should work. There you go. 90% of charts across the board, this is what you see. Green and red candlesticks. Okay. Yes, there are instructions in the Discord, guys. All right. Everything I'm talking about right now, there is a discussion in the Discord, and we have a wiki as well. So everything that you need is in the links in the description, guys. So just check it out if you want to know more. But just to help you understand something. All right. This is how retail traders see price. When they see a green candlestick, they think, okay, let's go long. So why on earth has price dropped? Hold on a second. Green candlestick, bullish engulfing candle, whatever you want to call it, where it engulfs the previous 1, 2, 3, 4, 5, 6, however many candles. That is considered as a strong move. All right. That could be considered as a valid signal to go to the upside. Why on earth do they drop it? Because it's the psychology. That's all there is to it. When you start diving into short-term day trading strategies, when you dive into the actual psychology of why price moves, and if you understand how the market maker's business model influences these sort of behaviors, okay, then you're going to be on the right side of the trade most of the time, because you're going to be wary of these sort of situations, okay? So if the retail trader looks at this candle and he sees it going up, he's getting ready to go long, because the retail trader 9 times out of 10 is probably going to be trading TikTok ranges. Okay. These are the like support and resistance points that TikTok traders kind of do. And they say set limit orders up here or set an order down here and wait for it to hit either zone and your trade is live. That's really what they endorse on TikTok. And unfortunately, there are probably really good traders on TikTok, but most of the ones that I've seen talk about this sort of setup. All right, how to trade support and resistance points. Well, you can see how the trader can get thrown off that trade, because if he sets positions up on here, okay, and he sets positions here, at what point is he getting stopped out? Because you can see how every time the market comes down and spikes these zones, they bring price back up, because traders go short on the break of this little area of support right here. Market maker taps that liquidity, opens all those orders, frees the liquidity for the retail trader, and brings price back up. Funnily enough, if I bring in the indicators on the traders reality indicators, we will see that this candlestick right here is a green vector candle on the 27th of August. So let me just bring that up on the chart. 27th of August, we should see a vector candle on Bitcoin. Now that is on, here we go. There it is right there. Green vector candle, 27th of August. Okay. And look at how they come and bring price back down there, because they recently trapped other retail traders believing that price is going to continue higher. So they add their longs and they have their liquidation points in these areas right here, which is why I say always pay yourself, because the market maker will drop price in such a fashion where you ain't going to have the time to close your trade. Okay. So going back to that chart right there, market maker has trapped the retail trader, triggered those orders, candle recovery. Okay, well, it was actually this candle right here. Sorry. There was it. It was this one. There it is right there. And if I go on to the 15-minute time frame, 27th of August, where are you? Just to make a point. There you go. 15-minute candle right there. Okay, where is it? In this zone right here. Vector candle right there. Okay. Now, the retail trader looks at this chart and he says, let's go long because of this green candle. All right. But then price reverses. And the reason it reverses, ladies and gentlemen, is because the market maker has been building his shorts at the highest possible point and he's managed to commit enough traders' liquidity in this area to initiate the move to the downside. It's not because there is no interest at this point. This candle clearly demonstrated that there was interest, because the retail trader decided to go long on the break of this candle and the break of this zone. He spikes price higher one more time to commit the retail trader to stay in the trade, and he brings price back down, and then he completely crashes through the zone. Are we all on the same page, ladies and gentlemen? Are we all on the same page? I feel like I'm going too crazy with this. Yeah, I'm going to have a look at a few altcoins in a second, guys. Okay, then. Cool. All right, then. So I hope you get that idea. And my guy, who Lewis, is it? I hope that answers your question, my friend. Okay. All right. Wicked. Okay, then. Cool. Let's conversate about what has been going on across the board. All right. So, where have the stars of the show been? Now, I know I haven't got a full list of coins on here, but I can see from here, we can look at DOT. DOT has done very well today. Okay. Alpha has done pretty well, but obviously it's pulled back. If you go watch today's stream, you will see us watching these moves as they were happening. Okay, so it was really good. Now, who wanted me to have a look at that? Let's have a look at ADA. See, Cosmos was actually all the way up here. Now, all of a sudden, it's come back. There you go. So, yeah. Cardano. Give me Cardano. Here we go. All right, ADA. Accumulation. Stinks of accumulation. Okay, I will look at KSM. ADA's accumulating in this zone. Now, this is what I was talking about in light of fractional disparity. All right, just look at it. Ethereum made a nice move to the upside. All right. On the other hand, Bitcoin didn't do anything. So are we in fractional disparity right here? Are we now going to sit through, potentially, another move by Ethereum to the upside, all because of this NFT game, all right, and the influence that NFTs are having, and the fractional disparity between Bitcoin and XRP and Ethereum is when Ethereum moves up, Bitcoin and XRP hold. Now, today, XRP, for me, was at least the star of the show. We've got to recognize that XRP did a beautiful move to the upside and pulled straight back. They recovered the previous vector candle, and look at that. Look at the precision of the vector recovery right here. So the wick right there recovered just slightly above this area right here. They recovered that zone ever so slightly, and then they pulled price back. But here's another trick for you. All right. Look at this. So, yes, today's session, these are the new range daily highs and range daily low for XRP. All right. The range daily high today was in this zone right here on XRP. It was in and around the 120 mark. Now, we have these indicators that say that when price hits the range daily high and the range daily low, it usually reverses. Let me show you something. Ah, it's gone. Damn. Right. The range daily high and low. I should have taken a picture of it, but on dollar yen, it actually hit the range daily high in one session and it hit the range daily low in the same session. All right, it hit the range daily low first, tapped it, and then pulled straight away from it. And the range daily high was hit, tapped it, and pulled away from it. Whenever the range daily high and the range daily low are hit, okay, expect price to reverse from those points. And it did it beautifully today in Forex. Okay. Turd token. XRP was a false move because of the lawsuit. Do you know what? It probably was a false move. Okay. But by principle, for us, it doesn't matter. Because we're going to capitalize on that move. We're going to do our very best to try and capitalize on these spikes up and these spikes down. Okay, that's what I'm trying to get across to you guys. This is a short-term day trading strategy. Okay, that's what's important. Short-term day trading strategy. So we're going to exploit whether price moves are up or down. It doesn't matter. Okay, which is why I say to you, okay, be careful with the news. Yes, maybe it could have influenced, the lawsuit or whatever information that influenced this move to the upside. But because it was an anomaly and it came out of nowhere, naturally you're going to expect price to pull back because it hasn't been a progressive move up. We want progressive moves, guys, like these moves here. Nice controlled moves to the upside and controlled moves to the downside. When you see this behavior right here, there is no reason why you can't capitalize on that. Okay, remember, this is a short-term day trading strategy. Okay, here we go. Eric, how you doing? So example of long-term liquidity recapture. AMP 12-hour, July 25th, August 29th, 048048 precisely, and people still believe the little guy's in control. Oh, there you go. There you go. You know, it's... How you doing, Armand? I'm all good, man. I'm all good. You know, it's listen, there are... for me, it's... I mean, I've been in the game for a while now, and I've understood that I can't care about where the general public thinks price should go. Because ultimately, all I'm dealing with is what's going on right now. That's all I can deal with. What is happening with price right now. Okay? Whether the news is good or bad. They're holding price in this zone. What's moving? Well, let's go and have a look. Well, it looks like Ethereum's the one that's moving, recovering this new wick candle right here. You know? And this is something about this strategy that you need to try and understand, ladies and gentlemen, okay? We are dealing with uncertainty, and all we have is moving averages and candlesticks. But understanding those candlesticks is going to be the difference between what happens now and where it's likely to go next. Okay? Okay. Schlapper, how exactly are they building long positions on a red vector candle? Aren't they pushing the price down? I don't really get the process of how they do it practical. Well, the way to simplify it to you, my friend, is this. Before you can buy something, someone has to be on the other end to sell it to you. Likewise, before you can sell something, someone has to be on the other end to buy it from you. Okay? Because the market maker isn't going to buy when the retail trader's buying. No. How can you buy something if there's no one on the other side giving it to you? You can't walk into an empty shop and ask them to buy everything. There's nothing to buy. The guy will stand there and look at you and say, hold on, bro, I've got nothing to sell. But you're there like, hold on, but I want to buy. And you're like, dude, I've got nothing to sell, bro. Get out my shop. It's not even a shop. Why are you in my house? Do you know what I'm saying? This is how that should, in principle, help you. Because the market maker, he's not going to buy when it rises. That's what the retail trader does. He buys at the lowest possible point. You've seen the number of times that we've seen Bitcoin, which is where we are right now. How many times do we see vector candles appearing at key notable points in the chart? The 48,000, the 47,000. Why do we see a red vector candle breaking down below that zone, below the 48? And why do we see a green vector candle breaking up above it? Because they're building their longs at lower prices in anticipation to close them higher above that point. Okay? So they get the best possible fill in that zone. Are we good? Give me a hey ya. Let me know that we are all good. Okay? Well, okay. Stem to stern. Okay, then here we go. Tino. Why does the majority of the crypto space never even mention market makers? Because the majority of the crypto space are retail traders. That's the truth. All right? That is the truth. There's only a few traders that are familiar with this concept. And even acknowledgement of understanding that price moves based on the market maker's business model. All right? Understanding that they mark price up to get the shorts filled at the highest possible point and close longs at the same time. Because they can only move price if there is liquidity that they can match their order against. Market maker ain't going to match liquidity against himself. Where's the money in that? He needs new money to come in. When he moves price back up, he's tapping the liquidity, or should I say, the liquidation points and the stops for the retail trader who's going short here and against, and he initiates this move to the downside by taking the liquidations and the shorts and the stops for the retail trader who went long on this move to the upside. That's how the business model works. And I don't understand why no one else is talking about it. And that's the truth. I just don't get it. Why, why would you not talk about the business model that we are actually involved in? Because that's the business model. Liquidity providers are market makers. That's what they are. They're no superhumans. They're just liquidity providers. This is their business. This is their platform. We come to their game. We come to their playground and we want to play on their playground. Okay? We can't come to their playground and say, get off. Nah, man. That's not the nature of the game. We come into their playground. We say, hey, can we play around for a little bit? They say, yeah, that's cool. But, you know, if you're here too long, you're going to get burnt. If you're not doing the right thing, if you're not getting out when we're getting out, you're going to get burnt. That's principally, that's what it is. You know? Well, this is true. It isn't Forex. I get that. It's not Forex. But by that principle, you're saying that there are no liquidity providers in cryptocurrency. There are always liquidity providers. You can only be in a marketplace if there is a liquidity provider. If there was a liquidity provider, or if we had an asset called oxygen, there'd be a liquidity provider behind it. Okay? Look where there are liquidity providers. Go and search wherever you want. Stocks, futures, Forex, CFDs, crypto, index. Okay? Everything is here. All right? You type A. What is there? There is a liquidity provider for absolutely every single thing out there, guys. Okay? Because you can only have a marketplace if there is someone to match orders. How do you encourage people to step in and commit money and match them against another order and another order? There's two types of money, smart money and dumb money. Okay? The reason why price moves to the directions that it moves to is because smart money is taking advantage of dumb money. When people are going long on candlesticks like this, market maker is going short because he's going to tap the liquidity on the move back down because the retail trader doesn't cut his losses. He gets them taken for him. He lets the broker do it, i.e. liquidation points or margin calls. So, to conclude the stream, ladies and gentlemen, the idea of where Bitcoin is going to go next, we need to pay attention to what Ethereum is doing and XRP and, of course, the altcoins as a whole. It looks like it's been a good day for the altcoins. They've made their gains and now they're pulling back. Today and now is going to be most important for these gains because if they do pull price back to key moving averages, like you can see on the 5 and the 13 EMA for DOT, you can see Alpha has pulled back nowhere near the 50. Are they going to show strength to continue higher? XRP as well on the same token. Bit of a wild behavior right there, but it's a big player in the game. Algo coming back towards the moving averages. This is where it is going to start looking interesting. Okay, first pullback outside of the W formation. Are we working a rise level 1? Happy days. Let's see if that's the case. Are we going to see W formation, level 1 achieved, drop, retrace, continuation to the upside? Next point in the chart will be 122 to take out these previous pools of liquidity up here on the hourly. Drop down to the 15-minute time frame and we should see some vector candles over here. As you can see, all of them right there. 1 point in algo is right there and another point is right here. Okay, and then we also have the highs. Okay, so ladies and gentlemen, if you are new to the channel, be sure to like and subscribe, and I hope tonight has allowed you to see things and put things into perspective with your trading. Okay, now I'm going to be going live again tomorrow at 2 p.m. so please, you know, no, not please, but you know, it would be great to have you there. Okay, and the reason why I do 2 streams is because we talk about what happened in the morning, in the evening. All right, it really does help. Okay. So, have a wonderful evening, guys. Thank you so much for passing through. Join us over at the Discord. It's a mad community, but there's love there, guys. Everyone helps everyone. All right? So, have yourselves a wonderful night. Take care of yourselves. Mad love. Peace. Oh, GMT. GMT. That's the time frame. Thank you very much, Philip, man. Thank you very much, guys. Take care of yourself. Peace.